What's up, everyone? And welcome back to another weekly review. This week, I want to take you through my top 5 tips that you can or should implement when learning the ICT strategy. This is just drawing from my months of experience as I've built my own strategy from ICT's core mentorship. That's all on YouTube. And especially now as we head into the last week, where we're kind of going through the last few tweaks before we start the 100K challenge. Thought it was could be a convenient time just to share with you my kind of top 5 takeaways for anyone who's also embarking on a journey of learning the ICT strategy. This is for you. So number one is to block out all the noise. I think, like I'd mentioned, ICT is one of the biggest retail traders in the space. And while it's a benefit that all this information is out there online, and not only from ICT, but from traders that have gone through ICT's program and have now formed their own courses, traders that haven't even gone through ICT's program and have learned from ICT traders and have developed their own strategies and are now putting out content online. It all becomes a bit of a headache, a bit too much, a bit of an information overload. And so I think the one thing that could really hamper your progress is just consuming too much of this content. There's always someone who made $20,000 last week. I've gone through hours of ICT content, and this is the only strategy you need to make money. Yes, while that may be true, just look at what they're saying. They've gone through hours of content and they filtered down, and now they have a strategy that's now made them money. And so you almost rob yourself of that deeper understanding, that deeper learning, when you are constantly looking for like this bite-sized one strategy dopamine hit that is, arguably not going to make you the 20,000 that, made this person the 20,000. Arguably, it's not even about the concept. It's about the foundational sort of principles that led to them having an understanding and crafting that content. And so similarly for you on your own journey, and I think more especially initially, pick the content that you want. If it's going to be ICT only directly from his YouTube, if it's going to be, Casper SMC or, Trade a Day or whatever, focus on, as little sources as possible so that you don't dilute that information, and then really put the onus on yourself to develop that deep understanding through the hours, of work and research and back testing. So block out the noise as far as possible on Instagram, Twitter, YouTube, whatever it is. Tip number 2, focus on higher time frame levels. While this may sound so common, I want to take a spin on it. I'm not saying only trade out of high time frame levels. While that's probably going to give you a higher strike rate, I understand that these setups aren't always available depending on how you want to trade as well. Some people may not want to wait 2 weeks for a setup or only take one setup a week, especially when you're still trying to learn a strategy. So I'm speaking about it more in the sense of, yes, try to primarily only trade out of high time frame levels, but even when you're identifying setups, ensure that they're in line with high time frame key areas. For example, you've noticed that the market environment is bullish. You can see that there's a daily order block and prices gravitating towards that point. If there's other confluences that line up with that daily order block, like price being in premium or discount, that's a confluence. And so you're stacking these high time frame confluences. You're targeting this daily level, but you can identify setups towards that level. Then obviously once you're in that level, that's obviously going to give you the highest strike rate. Then you trade out of that level. And this is just from the past couple of months data, realizing that a lot of my trades come from when I'm taking setups out of these 15-minute or 1 hour order blocks, fair value gaps. I found the best setups really do come from those high time frame levels. So while it's a boring one, really important. But I think you can look at it from a couple of different ways. It doesn't have to just be black and white, only take a setup out of this level. I think it just needs to be the foundation of your bias needs to be in alignment with the higher time frame. Tip number 3, take more trades initially. And there's a lot of people who are going to say, for shit, less is more. And you hear that a lot, like with some of the more consistently profitable traders. They say you want to reduce the number of setups you take and only take the high quality setups. But, there's the key in that is only take the high probability setups. How do you know what those are? When you're in the strategy building phase, you need to obviously identify your parameters, get a plan. It's not going to be perfect. How do you know it's going to, you don't know whether it's going to be perfect because you're testing a plan at the end of the day. But I think it's not bad to take a lot of setups. For me, a lot of setups is like 5 trades in a week. For someone else, that's a little bit. For some, that's a lot. But I think the more trades you take, the more data and feedback that allows you to get from your strategy to then filter out what's working, what's not. If you're only taking 1 trade a week, 2 trades a week when you're trying to build a strategy, obviously depending on, the time that you've given yourself to develop the strategy, and not to say that you bound yourself by any time limit, but it's going to take you a while to build up enough data to be able to sort of observe confluences, what's working, what's not, and then develop insights that are going to allow you to refine that plan. So taking more setups initially is not a bad idea. I don't think there's anything wrong with it. It allows you to refine from a point where you've seen your plan play out in a lot of different ways. And that builds on to the next tip. Number 4 is understanding the variation of concepts. Don't take things at face value, especially when you're learning, the strategy. If you're watching the ICT mentorship on YouTube, Michael may explain an order block, and he'll give an example. And I think it's in month 2 where he uses one trade in particular over 3 or 4 lessons. So he shows you one setup from a lot of different perspectives, and that's fine. But it's going to take you a lot. You're going to have to develop experience through taking trades in a lot of different environments to understand when an order block has a high probability of playing out versus when it's just going to get ran through. And so when you learn about fair value gaps, order blocks, breaker blocks, whatever it is, time and price, interbank price delivery algorithm, all of that, there's a big difference between theory and actually applying those concepts. So kind of just be patient with yourself until you've seen certain concepts in a lot of different types of setups, because that's really going to help you frame how you develop your plan. So just because something works in one way, don't expect it, especially early on, to work out, all the time. That's something you just need to be mindful of. And that just goes back to not being this pattern trader that just looks for something and then you automatically assume that the market's going to play out in a certain way. It's about a lot of different things outside of just, identifying this concept and then thinking that the market's going to, repeatedly do the same thing when you see this one candlestick formation. So understanding variation is key. And the last point, which is arguably the most important, is risk and trade management is essential. Again, a boring one, but I promise you something that is going to save you a lot of headache and a lot of heartache. At our core, we are risk managers. Framing your trade, focusing on being adequately protected rather than trying to squeeze every last pip out of it and get a 1:10, 1:8 risk to reward, is so important. Ensure that your capital is protected firstly, that your stop is in the right position from a risk management perspective. I like going into a position and putting my stop at a level, especially now when I'm still learning the strategy, where if my stop gets hit, then I know that my bias is invalidated, as opposed to having a tighter stop. It gets hit, my bias is still valid, and then price goes in my direction. So I may sacrifice some upside for having that wider stop, but that's fine, because at the end of the day, I'm just trying to firstly kind of build a bias and sort of identify the areas where price I feel is going to trade out of. And then over time, we can begin to refine that. And same on the upside. There's no use seeing your trade run as, to a 1:2, 1:3, and then come and hit you out at full risk, or full 1%. Learning to take risk off the table, take profit off the table. Currently at a 1:2, I'll close 50% of the position. You feel like initially you're taking away from, the max you can get out of the setup, but it happens more often than not where I close 50% and move my stop to break even, and then I get stopped out at break even. But when that happens, you feel better because you've walked away from something. And so managing your downside and ensuring that you're not being too greedy and, walking away with profit is so important, because to be honest, if you had to plot it on a bell curve, most of your positions probably wouldn't run to that extreme TP. At least that's what I'm seeing for now. So risk and trade management are so important. And so those are my top 5 tips for anyone trying to learn ICT. First is block out the noise. Second is focus on high time frame levels, either trading towards them or away from them. The third is take more trades initially, helps you build data. Fourth, understand variation of concepts, rinse and repeat until you understand how concepts play out in different environments. And the last one, most important, risk and trade management are so important. Don't forget, guys, consistency is the choice you make when you start doing the things you should be doing day in and day out.